Good morning and hello. Welcome to our webinar today, the 2019 Nonprofit HR Legal and Accounting Trends. My name is Max Smith. I'm the Communications Director with 501c Services. We are a 100% employee-owned company that provides alternatives to state-run unemployment insurance programs. We provide services to more than 1,500 nonprofits nationally. We are the administrator of 501c Agencies Trust, which offers a comprehensive suite of risk management services and multiple stop-loss protection solutions for our 501c3 nonprofit members, as well as UInsure, which is a first dollar unemployment insurance program not only for nonprofits, but government entities and tribally owned businesses as well. And finally, we also operate the HR Hotline, which serves more than 1,500 for-profit and nonprofit organizations across the country. Many of you already work with us, and we appreciate you doing so and look forward to working with you all again further in 2019. I have a little bit of housekeeping just to go over some fundamentals of the webinar. We have 3 panelists today. You should submit your questions as they come to mind using the GoToWebinar panel. Each speaker is going to answer questions at the end of their section. We've got them divided into sections. So if you have a question, please submit it, and then we'll get to it at the end of each section so that we don't have to go back to a different subject matter at the end. And also, if we can't answer your questions live here on the webinar, we'll shoot you an email later today or tomorrow with answers to any questions. The materials are available right now in your GoToWebinar browser there. If you go down to handouts, you can download the PDF. I'll also email the PDF later today. There are recertification credits available, CAE, HRCI, and SHRM. If you need those credits from me, you need to complete our poll or survey at the end of the program. It will pop up when you close the browser or when we shut off the webinar, and there will also be a link to that poll or that survey in my follow-up email later today. So if you need those credits, make sure you let me know so I can give them to you. And also, we will have another webinar again next year. What funders want. I'll have Noel Thomas with Social Solutions join us. They provide software to nonprofits, and they have a lot of data on funders and funding trends. So Noel's going to be sharing that with us in January next year. Now I'd like to go ahead and quickly introduce our panel so we can get started. First up today will be Sonia. She's a certified human resources professional with more than 25 years of experience with nonprofits. She also happens to be my favorite coworker. Matt is with Martha Colina. He is a partner in the litigation department and the labor and employment practice group. That sounds very intimidating. And then finally, Paul, he's a partner with Cohn Resnick and their non-for-profit and education industry practice up in New England. So without any further ado, we're going to start with Sonia, and she's going to be going over our nonprofit HR trends today.
Good morning, everybody. Thank you, Max, so much. We're just going to jump right into this. So HR trends for 2019. You know, we all see the articles and things pop up on engagement. It's still a priority, a top priority. So instead of asking the question, why is it important? I think the better question is, why isn't engagement important? So here's how I think about engagement. Engagement goes beyond satisfaction. Having satisfied employees, that's a good thing, but that's not enough. Engagement rises above and beyond the basics. Engagement is understanding that what you do is important and knowing how and where everyone fits into the big picture. You know, knowing this is crucial to having that engaged workforce. It's still a top priority, and with such a tight job market, keeping our talented, motivated employees who continue to perform at top levels should be our priority. Why? I think we all know that when employees are disengaged, they're at greater risk of actively searching for another job. Statistics say that more than 25% of your current workforce are either thinking about or are actually currently looking for their next position. It's a challenge to find and keep top performers. Some organizations are better than others in developing that engaged workforce. But how do they do it? These organizations continually build trust. They provide ongoing communication and continually help their employees see how what they do daily guides their organizations to succeed. They happen to be purpose-driven. Now, I believe that we all in the nonprofit community, we've got a definite leg up here. Many employees specifically choose their field and organizations due to those missions and visions. But what about those that landed their jobs by happenstance? Are you confident that all of your employees know what your mission or purpose is? Do your employees understand and see how their purpose, their job duties, fit in and serve those that you serve? So how do you get started to create a culture of engagement? In a nutshell, make sure that your leadership, top to bottom, is committed to building trust, communication, transparency, and action. Define and refine your mission to fit your employees. And I'm not talking about changing your mission for your organization, but perhaps having a mission for your employees. Ensure that everyone knows what their purpose is and how each one of them makes a difference. Number 3, communicate, communicate, communicate. I can't stress that enough. And follow through. Make no mistake that building and or enhancing your culture of engagement, that takes time and commitment. And the worst thing you can do is to start the process and not follow through. So now we're going to segue into harassment. We're going to go from engagement to harassment. Mac, that's your cue.
Hi, everybody. This is Matthew Curtin. So,
sorry,
first,
I was going to, Matthew's going to talk about the legal end of this. I'm going to talk a little bit about, that it's still an issue. And it has been, we're aware that harassment takes many shapes and forms and has been around for thousands of years. And it's still an issue. Why? But as a society, I think that we are beginning to see, let me back up a bit. We know that it's always been an issue, severe and pervasive. And this last year has brought unprecedented attention to the issue. And as the power differential equalizes, I believe that we are finally going to see some lasting change. But perhaps part of the problem lies in how each of us defines behavior that crosses the line, or our own interpretations of what that consists of. How do we in our organizations and in our personal lives ensure that bad behavior, not just illegal harassment in the workplace, doesn't enter our own organizations? So like I said a moment ago, Matthew's going to cover the legal end of things. And just like with engagement, there must be buy-in from the top, all levels. You have to have an expectation of kindness, compassion, dignity, empathy, and most importantly, respect for everyone. So how do we ensure this? So I've got a couple ideas for you. As an organization, all of you, define bullying, harassing behavior. Come up with definitions of when things cross the line or become fuzzy. Perhaps a survey format is going to be your best friend so that employees can be more open and honest. And that helps to create trust. Number 2, develop a training that covers those definitions that you've defined as a group. And then perhaps in that training, explain how to be respectful. And maybe that seems silly, but not everyone knows that yelling or raising your voice to a coworker isn't professional, as well as not using negative language. And then go beyond and demonstrate what civility, compassion, and kindness look like by providing examples of positive interactions. Number 3, zero tolerance for negative Neds and Nellies. Nothing breeds bad behavior like those two. Their deficient, unacceptable behavior and attitudes are highly contagious and often lead to bullying, nasty behavior. Number 4, consider adding a piece to your employee handbook that defines examples of unacceptable bad behavior. So while that behavior may not be illegal, it can be just as devastating to coworkers and organizations. Number 5, education and training. Go beyond what the law may dictate in your state or city. And like with like with engagement, I want you to communicate, communicate, communicate. If you see something, say something. Don't accept passive consent. And keep your doors open with HR, supervisors, and the leaders in your organizations. And 7, follow through. So important. And my final trending subject, we're going to just touch on a few things in benefits. You know, what's new on the benefit horizon for 2019 and beyond. College loan repayment programs, fertility treatments, and of course, state and local paid sick leave laws. So why? These all tend to be about financial health. So let's start with the offer to help with student loans. These student loan repayment programs are also referred to as, now this is a mouthful, employer-sponsored third-party student loan repayment assistance programs. We're all well aware of the high cost of education, and that means that many of our current and future employees are likely to be burdened with high student debt. This type of benefit, these loan repayments, have been really successful in helping to lure good candidates in our really tight labor market. And we know that financial distress, that reduces employee productivity. It can undermine an employee's health, and of course then increases absenteeism. So there was a recent study, and it found that 40% of our millennial workers have high student loans. This is probably, very likely to apply to that incoming Generation Z. So when we can help folks to repay those hefty student loans, it also means that our young workers may be able to start saving for retirement early as well. They don't have to make that decision. Do I pay off my loan, or do I start saving for my future? Now, what about fertility treatment benefits? Those are also on the rise as a trending benefit. Generally, folks are waiting longer to have kids. And then there tends to be a lot of anxiety over possible infertility and the cost of fertility treatment. Infertility is stressful and takes a toll on an individual's, again, their emotional and physical health, as does the stress of paying for said treatments. Over 60% of large employers now offer some type of fertility benefit, and it's gaining traction in the nonprofit community. So one idea is to add a rider to your existing health plan, and that can be a cost-effective way to add to your medical coverage. I didn't know this, but there are 15 states that have either an insurance mandate to offer or to cover some level of infertility treatments. That was a new one to me. But I want you to think long term if you're going to consider adding or expanding on what you currently offer in regards to fertility benefits. Take a clear look at your employee demographics and how they may impact the demand for those benefits. Get feedback from your employees on what benefits would be helpful and beneficial to them. So I suggest doing a survey with employees on what's important to them in regards to pay and benefits each year. Because once you implement something, rescinding benefits can be difficult and then potentially devastating to specific employees. Paid sick leave. While great in theory, what we've seen and heard over the last few years is that those final details often aren't ironed out by implementation date, and that leaves employers hanging. Paid sick leave laws vary state by state and range from 24 hours to 40 hours of possible paid sick leave time. Currently, there are 12 states and 21 cities and counties that have passed sick leave laws, and of course, just like in unemployment, the rules aren't the same in each state. Often, cities and counties that have passed those paid sick leave laws are more broad and generous than the state paid leave laws. This trend continues with many states also passing their own paid family leave laws. So what's an employer to do? Know your state, city, and/or county's sick leave laws. So, for example, in California does not allow employers to require the sick employee to find their own replacement. Number 2, document your sick leave policy. 3, communicate that policy. So, for example, in Washington, that state requires you to give notice in your employee's native language. 4, track sick time given and used. And 5, retain your sick leave documentation, the time that you've given and the time that's been taken for a minimum of 3 years. And several of those states have 5-year record retention rules. So I finished my portion. I believe my time is up, and I'm going to turn things over to Matthew.
Thank you, Sonia.
You're welcome.
So moving on, I think let's move to the first slide of the topic that I'm going to address, which is Me Too 1 year later. And where are we? Has the workplace changed? If so, how has it changed? And what are we looking at for employers going forward? Now, I think it's interesting to look at some of the statistics that the EEOC has come out with recently to kind of give you an overview of what's changed in the past year from a legal perspective. Now, the EEOC is the federal administrative agency charged with processing claims of federal harassment claims or discrimination claims. So that's the Equal Employment Opportunity Commission. The EEOC recently released some statistics concerning workplace harassment and how it's changed over the last year at the EEOC. So here's some statistics. Charges with the EEOC alleging sexual harassment increased over the past year by 13.6% from fiscal year 2017. For charges alleging harassment, the EEOC has issued reasonable cause findings 23.6% more often than in fiscal year 2017, and that equals approximately 1,200 cases. The EEOC has recovered nearly $70 million for alleged victims of sexual harassment through administrative enforcement and litigation in fiscal year 2018, and that is up a staggering $47.5 million from fiscal year 2017. So you're looking at, you're almost reaching 50% increase in recovery of money for alleged victims of sexual harassment through the EEOC process. In appeals of sexual harassment cases involving federal employees, awards increased by more than 180% over fiscal year 2017. So those statistics paint a pretty stark contrast from what the EEOC was seeing in 2017 as opposed to fiscal year 2018, which I think is indicative that workplace sexual harassment and gender discrimination is on everybody's mind. It's prevalent. I think people feel more empowered to speak out about it, and that's being reflected in the amount of claims that are being processed at the EEOC and also at the court level. So what else are we seeing around the country? I think one example of a reaction to the Me Too movement is what's happening in New York State. Now, in New York State, there is new legislation that requires distribution. It requires that all employers distribute sexual harassment policy to its employees, and New York State has issued a sample policy that's really the baseline for compliance in New York State. An employer can draft its own policy, but it needs to at least comply with the basic requirements of the model New York State anti-harassment policy. Well, it's not an anti-harassment policy. It's really just, it is a straight-up sexual harassment policy. Also in New York State, there's a requirement for sexual harassment prevention training for all employees, not just supervisory employees, but all employees, and there needs to be training on an annual basis. So that's a new requirement in New York State, and it's pretty draconian compared to what we've seen in other states, but I think that this might be the new norm. In New York State, newly hired employees must be trained as soon as possible, and employees are going to have to, they won't be required to keep records of compliance with the law, but I would suggest that as a best practice, employers do keep such documentation because it can certainly help with litigation down the road. Now, the state's going to has provided model materials in various languages, and it's going to be a best practice for employers to assess their workplace and determine whether they need to post such policies in different languages. So what are some of the best practices that employers can look at and to combat sexual harassment in the workplace and keep up with Me Too? One thing that I've noticed over the past year is many of the policies that I'm reviewing, the sexual harassment policies I'm reviewing, are woefully out of date. So I think it's a best practice for all employers at this point to sit with their employment counsel and review their sexual harassment policy or the anti-harassment policy and consider whether, given their state's laws or federal law, the policy needs updating, and whether it's still in line with the culture of the workplace and the brand that the employer wants to project. I'm seeing in many instances sexual harassment policies that are 20, 25 years old. That's just too far out of date. I suggest that employers review their sexual harassment and equal employment opportunity policies on an annual basis to make sure that they're keeping up with changes in law. Similar to New York State, I expect that many other states will follow suit and start implementing more all-encompassing sexual harassment prevention laws. In Connecticut, for instance, I know that right now it's required that employers with 50 or more employees provide sexual harassment prevention training to supervisory personnel within 6 months of employment. However, there's been legislative efforts in Connecticut that failed during the last legislative session to impose some pretty strict requirements concerning employee training and sexual harassment prevention policies, and also expanding statutes of limitations for bringing sexual harassment claims. I expect in Connecticut some form of legislation along those lines will pass within the next year or two, and I would I expect that's going to start to spread to other states as well, especially in the Northeast and out West. I think that that's going to be a trend that we start to see. So this is definitely an issue that needs to be on employers' radars. It can't be a set it and forget it type of thing where you review your policy once and then you forget about it for the next 10 years. This is not going away. Sexual harassment awareness is heightened at this point, and I think that there's going to be so many legislative changes and changes in the law that at least on an annual basis, it's a best practice to review policies with counsel. One thing I've seen with a lot of employers is sexual harassment prevention policy, but in many cases I'm advising that employers consider expanding that policy to an anti-harassment policy that covers not only sexual harassment but other types of harassment in the workplace. Again, I think that this is a best practice, and it can only help. It can help proactively by educating employees about what is and what is not allowed, and that goes hand in hand with what Sonia was talking about. And it also can help reactively in defending against any allegations in litigation or administrative charges about harassment, to show that the employer has a robust anti-harassment policy that details what is and what is not allowed in the workplace and provides a meaningful complaint process. So employers should review their policies and make sure that they have those types of policies in place. Now, training. That's another thing that employers can do to get ahead of the Me Too movement. I find that often employers don't want to pay for the expense of sexual harassment prevention training. They don't think that employees are going to listen, or it's just not a hot topic because really it's just a business disruption. I don't see sexual harassment prevention training as business disruption. I think it's necessary in today's workplace. I think that employees need to be educated on what is and is not acceptable. I conduct these trainings all the time, and it still amazes me what kind of questions I'll get about what people think is and is not acceptable in the workplace. So everything is not perfect out there. Training needs to happen. I think it's I think on a 1 or 2 year rotating basis, I think that that's acceptable. Definitely for supervisory employees. I also think it also helps to give training to non-supervisory employees. Like in Connecticut, it's only mandated that we have sexual harassment training for supervisory employees. But I think in many instances it can help to educate rank and file employees on the employer's sexual harassment policy, what is and what is not acceptable. I like to do role playing in these sexual harassment trainings to give people an idea of the kind of scenarios that can come up and make them think about what is and what's not acceptable and how they should and should not react in certain situations. So I think that's another best practice, is implementing sexual harassment training on a regular basis for all employees. So that's an update on where we are with Me Too 1 year later. We see a lot of high-profile stories in the news these days, but it's not just the high-profile stories. As you can see from these EEOC statistics, this is a real issue in the workplace that's happening on a day-to-day basis with all types of different employees. So employers really need to take it seriously. It is one of the biggest threats as far as legal issues go to employers today. So the next topic that we're going to talk about, marijuana in the workplace. Another very hot topic. Recent states to authorize marijuana. Michigan in the last election voted to allow for recreational use of marijuana. Utah and Missouri that both voted for to authorize medical marijuana. The only other ballot initiative in the last election cycle, I think, was North Dakota. That ballot initiative failed, so that was in the minority. So 3 out of 4 of those states that had ballot initiatives passed some type of authorized marijuana use. Recreational marijuana is now legal in 10 states. Medical marijuana is legal in 33 different states. And the District of Columbia has also authorized the use of marijuana as well. So really, we're looking now at the majority of states authorize some sort of marijuana use. Most of it is medical marijuana, but 10 states is a significant number, and those 10 states are now allowing some type of recreational marijuana use. And where we're seeing the recreational marijuana use, it's generally on the coasts, although Michigan now is kind of one of those heartland states that's allowing it. Colorado is also another state in the middle of the country that's allowed for recreational marijuana as well. So the trend is upward. It's not going away anytime soon. I imagine at some point in the future, although it's hard to predict, that the federal government's just going to have to take this issue on. But for now, we really have that conflict for employers between what's permissible via state law and what's permissible via federal law. And under federal law, marijuana is still a controlled substance. It's a Schedule I controlled substance, and consumption and use and distribution is still unlawful. So one of the big issues that employers have to face these days is how do we deal with the tension between federal law and state law? And that's one thing that we're seeing, especially with multi-state employers as well, because there's many employers that have employees in California, Texas, and Connecticut. And in that situation, you'd have one state where recreational marijuana is legal, one state, Texas, where no form of marijuana use is legal, and then you have Connecticut where medical marijuana use is legal, but not recreational. So you've got three different states with three different laws, and then you have the federal government, which completely bans the use of marijuana as a whole. So one thing that I think is helpful for employers is to review their policies, same as with the sexual harassment. I'm seeing many outdated drug use policies, prescription use of prescription medication policies, drug testing policies that are woefully out of date and have not accounted for state laws that authorize the use of medical marijuana or recreational marijuana. And it's particularly appropriate to review those types of policies in states that are allowing for the use of medical marijuana. For instance, in Connecticut, I've seen many policies that are just flat out banning the use of marijuana in any form, but there is a law in the books that prevents discrimination on the base of use of medical marijuana, so long as somebody has a prescription to use such marijuana. So an employer can really get themselves in hot water in Connecticut if they're making hiring or personnel decisions based on the use of someone's lawfully prescribed marijuana. Now there's certain other there's exceptions to that in Connecticut, for instance, where an employer doesn't need to allow somebody to use marijuana while on the job, or if federal law like DOT testing dictates otherwise. But I mean, that's just one state. All of these states have different laws, and really, I mean, it's such a patchwork at this point that employers really need to go through their policies, look at the states that they're operating in, and make sure that they are accounting for these the patchwork of various laws, and also the federal prescriptions that they need to take into account. If they are a DOT employer and they're employing CDL drivers, and there's drug testing that goes along with that. That might not be as prevalent in the nonprofit community, but there might be other issues that go along with federal requirements and federal drug testing that employers need to be aware about. So reviewing a policy with your employment counsel, especially if you're multi-state or you're doing business in a state where medical marijuana is authorized, I think is of paramount importance, especially if you haven't done it within the past year or two. And again, I'm reviewing that those policies be updated on an annual basis because we're seeing more and more states authorize some form of marijuana usage every election cycle. And in some cases, like Vermont, there's just laws that are being passed. So it's hard to keep up with all of these laws concerning the usage of marijuana and how it affects the workplace. So I recommend that you consult with your employment counsel on an ongoing basis about these measures. Some employers, for instance, employers that are operating in Massachusetts and Connecticut as well, I think at this point, need to take into consideration whether reasonable accommodations exist for users of medical marijuana. And there was a case in Massachusetts directly on point that said that Massachusetts employers need to make reasonable accommodations for users of medical marijuana. Does that mean that you need to allow somebody to smoke marijuana on the job? Probably not, but you still need to engage in the interactive process in Massachusetts as if somebody were a disabled employee, and they might very well be a disabled employee. And you have to just look at the states that you're operating in and whether or not there is any requirement to engage in the interactive process to determine whether there's reasonable accommodations for medical marijuana users. Again, training. I think supervisory training is very important on this point. Talking to your supervisors and making sure that they know what is and what is not acceptable in the workplace when it comes to marijuana usage, what the policies are, how to react when somebody brings a supervisor a prescription for the use of medical marijuana, training HR, hiring partners on how to handle situations where somebody presents them with a license for the use of medical marijuana, or the situation where a MRO informs an HR hiring person that a drug test came back positive, but that the applicant had supplied a prescription for medical marijuana. Training your employees on how to deal with these situations will go a long way to mitigating your risk on litigation concerning unlawful discrimination on the basis of medical marijuana use. So I think that covers marijuana, given the time that I have. And the last topic I just want to briefly touch upon, because I think I'm running out of time here, is the NLRB's changing attitude on permissible employment policies. Now, I think this is a pretty big development for all employers, and I wanted to highlight it for the nonprofit crowd just because many nonprofit employers are unionized and have to deal with the NLRB on an ongoing basis. And I expect that many of you are aware that over the past 8 years with the Obama administration, the past 10 years, the NLRB really narrowed what is permissible and what is not permissible by way of employment policies. Well, when the Trump administration was seated and was able to put some members on the National Labor Relations Board, it immediately changed the standard on how to assess handbook policies. And just to be clear for everybody, the National Labor Relations Board is the federal administrative agency charged with administering the National Labor Relations Act, which in the National Labor Relations Act basically governs labor relations on the federal level. And employees that can avail themselves of the protections of the National Labor Relations Act have what are called Section 7 protected rights. And so employees are protected and allowed to engage in protected concerted activity to improve their conditions of employment. And what was happening in many instances was facially lawful employment policies that anybody, a reasonable person would think an employer should be able to implement no problem, they were being struck down because the board was saying that these policies could arguably cut against an employee's Section 7 protected rights. For instance, no recording policies. Many employers just assume that they can implement no recording policies in the workplace, and there's many different legitimate reasons that would support a no recording policy. However, towards the end of the Obama administration, a case came down where the NLRB said that no recording policies are presumed to be unlawful. Well, let's look at what happened within the past year in the Boeing Company decision. In the Boeing Company decision, the board basically relaxed the standard for what is and what is not a permissible employment policy. And it basically said that it was going to take a reasonableness approach to assessing employment policies. And the board in the Boeing decision identified three categories, basically, three buckets of employment policies that are lawful, three buckets that they would use to assess employment policies. One, policies that the board designates as lawful to maintain. Two, policies that the board would deem to warrant individualized scrutiny on a case-by-case basis. And three, policies that the board just maintains are per se unlawful. And very quickly, I'll give you some examples of these three types of policies before I cede my time. The Category 1 rules that are generally allowed at this point, civility rules, prohibitions on behavior that's rude, condescending, or otherwise socially acceptable is an example of a lawful civility rule. Civility rules were coming under attack under the previous board, and many of them were being held unlawful, and it was very difficult to parse what kind of language would be lawful and what would not. No photography or recording rules. Generally, a rule that prohibits the use of cameras or other recording devices in the workplace is now an example of a lawful rule. Insubordination rules, disruptive behavior rules, confidentiality rules, rules against defamation or misrepresentation. All of these are examples of what the board is now saying are presumptively lawful rules. Now, there's situations where you could word such a policy so that it's unlawful, but these are presumptively lawful. Category 2 policies that are a board would individually scrutinize. Conflict of interest rules. Rules regarding disparagement or criticism of the employer, as opposed really to civility rules that are regarding disparagement of other coworkers. Rules regulating the use of an employer's name, as opposed to rules regulating an employer's logo or trademark. And rules generally restricting speaking to the media or third parties. And that's been a big sticking point in the past. Finally, I'll give you two examples of Category 3 rules that are now unlawful to maintain, and I think this is consistent with prior law as well. Confidentiality rules specifically regarding wages, benefits, or working conditions, and rules against joining outside organizations or voting on matters concerning the employer. So that's really been a big sea change in how the board assesses employment policies. And to the extent that anybody has any questions about that, please feel free to reach out to me later. But in light of these changes, I again recommend that employers and all employers review their employee handbook and see if there's any rules that need to be updated, or if there are rules that you want to expand in light of this broader assessment of employment policies under the new National Labor Relations Board. So with that, I'm going to cede my time to Paul, but I'm happy to take questions at the end.
Thank you very much. This is Paul Ballasy, and I'm a nonprofit partner at Cohn Resnick. Cohn Resnick is the 11th largest accounting firm in the United States with offices throughout the United States. And one of our main focuses is on non-for-profits, and we audit over 1,700 different organizations. And I'm pleased to present to you today a little different focus of topic, which is the nonprofit accounting trends for 2019. There's on the first item that we are going to cover today is financial statement changes. If you're involved in the finance department, most of you may already know about these items, but these are items that you should acquaint yourself with. The first item has to do with the financial statement presentation for not-for-profits that's going to be applicable for years ending December 31, 2018. So if you have a fiscal year, you're going to be implementing this in 2019. And there are three main things I just want to draw out on this that requires some thought. One is the net asset class definitions are going to change from permanent, temporary, and unrestricted to with donor restriction and without donor restriction. The next item that's going to be of change is going to be a requirement that you have a statement of functional expenses in your financial statements. And many nonprofits who are not voluntary health and welfare organizations did not have such a statement. So if you do not have that statement, it needs to be drafted and prepared and thought about how you're going to allocate expenses and show them on your financial statements. The third change that you need to consider is one in regards to a brand new footnote that will be required in the new year, and that has to do with liquidity. And this requires a disclosure that's quantitative in nature as well as qualitative in nature. I've seen about 10 different approaches to this note, and depending on how complex your organization is, it may take a while to complete. So I would say for those that are contemplating an audit soon or in the coming year, you need to start thinking about this liquidity footnote and start drafting it. There are some people who have early adopted, such as University of Chicago, Dallas Theological Seminary, United Way Worldwide, and so there are tons of examples now out on the internet for you to pull in and see the different ways you might want to look at it. The second trend is in the revenue recognition, and for those that will have a December 31, 2019 audit, you will have to change your methodology for recognizing revenue. Believe it or not, the accounting standards did not have a standard on how to record revenue, and each industry kind of had their own unique way of recognizing revenue, so they've come up with a standard that's more principle-based. There are 5 steps. I don't have time to go through those 5 steps today, but there's a 5-step process you go through to figure out how to recognize revenue. Most of the not-for-profits that I've been looking at probably will not change the ways that they actually record their revenue. The big change will be in how you disclose the recognition policy in your footnotes and your summary of significant accounting policies. But some industries that do need to really pay attention to this are industries such as healthcare, education, housing, and membership organizations. You may be impacted by this new financial standard change. The good news is contribution and grants are excluded from this guidance and will be recognized consistent with how we've done it in the past. But FASB did just issue a clarification on how to record government grants with ASU 2018-08. And this guidance, from this guidance, it appears that most government grants will now be recognized following the contribution rules and not these new revenue standards under the new ASU 606. So you should make sure you understand that, especially if you receive government funds, you may be slightly changing the way you recognize your revenue. The third trend has to do with leases. It's not applicable to 2021, but if you are an organization that has a lot of leases, the short answer is all operating leases will be capital leases in a going forward basis, and you might need some time to prepare for that and deal with the banks. If you have any negotiations with banks in the next 2 years, you need to be making sure that, and you have debt covenants, you need to make sure that the debt covenants take into effect this new standard relating to leases. So that's a really quick high-level look at some of the financial changes that we need to think about in 2019. And next, I'd like to talk a little bit about taxes. So typically, not-for-profits, we don't have to worry too much about taxes, but there were 2 things that happened in 2018 that will affect 19 and forward. And one is the Wayfair decision by the Supreme Court in May that basically, if you sell products outside your state in which you operate in, you may now have nexus there. Nexus is a minimum contact that a taxpayer must have with a state for the taxpayer to be subject to the state's tax jurisdiction and therefore pay sales taxes. This is probably the most significant decision that's happened in the last 25 years, and it really defines the term nexus and whether you may have to collect sales tax if you're selling items on the internet or whatnot. 34 states have already indicated that they intend to enforce these new rules, and in the grid that I was looking at, it's from now to sometime in 2019 that states are going to start implementing rules around this. So if you do any kind of sales on the internet, you need to be paying attention to that, or even through mail. It will be required. You'll be required to have an analysis done. The second item that affects not-for-profits is the unrelated business income tax. The Tax Reform Act that was passed in this year had two main issues that I want to just cover today that may affect your organization. So if you have multiple unrelated business activities, you can no longer net them together. You have to look at each line separately for purposes of determining if you have any unrelated business income taxes that you need to pay. So, for example, if you sell books that are subject to unrelated business income and you have a rental activity that's subject to unrelated business income, you have to calculate each of those separately. And so let's say that the rental activity kicks off a loss and the book sales kick off an income. You would pay tax on the income. The loss would get suspended and carried over for purposes of your rental. And so each of those activities will need to be separated, and that may require you to consider, especially when you're going to be doing an extension in 2019 for your 2018 tax return, you're going to need to consider whether you might need to pay some taxes in with your extension. The second issue is related to transportation, and those receiving employee parking benefits. If you have a qualified parking benefit, which is basically a compensation agreement with the employer and the employee, where the employer pays for your parking, that's going to be considered a taxable fringe benefit to the employer. It will be taxed at 21%. There is a proposed bill before Congress right now to repeal this, so stay tuned on that. Third item has to do with sales tax requirements. So most of you may know that the uniform guidance, which used to be called Circular A133 for not-for-profits, was implemented back in 2014, but they continually deferred the procurement standards piece of the uniform guidance. And so now all organizations are subject to it. It's in play now, and if you do have contracts with the federal government, you're required to implement your procurement standards. So all organizations must have and follow written procurement standards. If you don't have them in writing, then you will receive a finding on this year's single audit report. So please implement them as soon as possible. The second item you need to consider is conflict of interest policies need to be updated to specifically address procurement matters. So again, if you have federal funds, you should consider revisiting your conflict of interest policy. And then the last item to consider is that the organizations must use one of 5 different methods that are outlined in the uniform guidance. Again, in the interest of time, I can't go through each of those. If we could move forward to the slide that says business office. Thank you. Next one. Okay. We are seeing a trend towards outsourcing. So that's another trend that we're seeing in 2018 and looking into 19. Specifically outsourcing functions such as IT, accounting, and human resources. The trend seems to be accelerating. Some of it's because the economy is doing well and it's hard to find good talent. Some of it's because you get a higher level of expertise when you outsource, and the risk, especially in IT, is really high. And so some organizations just don't need a full-time IT manager or a full-time CFO. So it's a trend that we're seeing. The full in the accounting area, the full outsourcing of the whole accounting department is being turned over to some bookkeeping services. In today's environment, with electronic transfer of funds, scanners, software tools to manage documents and approvals electronically, the need for on-site finance departments is just not as critical as it has been in the past. And so we've noticed that trend and just wanted to kind of bring that forth and let you know about that. The last item I just want to hit upon at a very quickly is risk management. The last slide. And we performed a nonprofit survey over the past 3 years. In our last published survey, most of the respondents stated that they've conducted some type of annual risk assessment. However, when we asked about their confidence in their existing policies and procedures, only 65% said they were very confident in the organization's policies. And so this leaves some improvement for all organizations. One of the key areas is reputational risk. 38% of the respondents said that they have only 38% of the people said they had a plan in place to deal with a reputational crisis. And so that's an area that you need to think about. And secondly, in the IT area, only 52% of the respondents said they had a cybersecurity breach response plan. And with all that's going on in cybersecurity, that should be 100%. So I would encourage you, if you do not have such a plan, that you would seek that out and find some professionals to help you in that regard. 65% of them people said they actually have done an IT risk assessment, leaving 35% who have not. And so again, with the risk in the IT environment, we think it tied in with your reputational risk. It's really, really important that you address those. The last slide I have on here has to do with mergers and acquisitions, and in my last minute, I'm basically going to tell you that I facilitated 3 different mergers over the past year, and I know of 3 more that are in the works. It is a hot topic right now. Most are driven by savings and integration of like type of, where there's synergies, maybe adding to a program or kind of complementing a program. Size often matters, and so combining often helps allow for better purchasing power. With the difficulties we've noticed in the past in merging is dealing with the varying interests of board members and also learning to manage manage the management teams. And so that's the most difficult part, is bringing the 2 parties together, is that you don't have 2 owners, you have multiple. And that's my timer that is saying it's over. The multiple competing interests. So just those are some trends that we're seeing in the accounting world, and I'm going to turn it back to Mac.
All right. Well, thank you. We did get some questions throughout, but we didn't have time to address any of those in our hour. So I just want everybody to know that we'll be sharing your questions with the panelists so they can follow up with you via email, most likely in the next 24 hours to answer those questions. So we appreciate you shooting those over to us. Thanks to Paul, Matt, and Sonia for joining me today. And everybody have a great new year. We'll see you next year. Thanks, everyone.
Thanks, Mac.
Thank you.
Bye. Thank you.